going into 2025, we had an estimate that profits for 2026 on the S&P 500 would be $320. Even the bearish pundits on Wall Street said 320. We multiplied, well, I should say they multiplied that by about 20, which has been the S&P average P now for the past 5 years. And they said 320 in profits times 20 times earnings would be 6,400 fair value on the S&P. Not bad at all. 6,400 from 6,150. It's not the big 20% jump that we got last year or the year before, but it was tremendously, tremendously fairly valued, meaning we weren't buying the S&P like we were in 1999 at 44 times earnings. And I told you that. I told you that one-on-one if we had a meeting. I told you that on the show. This is not the 1990s, and that was true. Our estimate was a little bit higher. We said 320 in profit times 21 times earnings because we thought that the Fed would moderate, and they have. They have moderated. They haven't raised interest rates. They're talking about cuts. We'll see what happens. I doubt it. I doubt we're going to get cuts, but it's possible. So that put our estimate on the S&P around 6,700 points for the end of 2025. Now, I know it's hard to see a path towards that this year. I would agree in a way. Some of the turmoil the past couple weeks and months have maybe altered that a little bit, but it still doesn't change my math. It still doesn't change the reality that I think eventually, whether it's this year or next year, I think you're going to see 6,700 points. So it's just a matter of timing, all driven now by the Fed. That's the big question mark, is what is the Fed really going to do?